Good day, everyone. Thanks for joining us here in the charts. It is the Market Beast, Napoleon Macro. We have something different on the menu today. We're actually going to take a look at the DXY, the U.S. dollar currency index, and see what is going on in the market. Is it in a very large range? What could we expect to see now? We're going to do that. We're also going to take a look at what happens in comparison to the U.S. dollar if it moves higher here in the short term. We're going to take a look at gold. We're going to take a look at the U.S. 10-year yield, the Dow Jones, the S&P 500, and WTI, crude oil, guys. So sit back, we'll go over the details, and I'm going to let everyone know exactly what to look for if we get some positivity going in the DXY here. So let's make it short and sweet, guys. So welcome back, loyal family. If you're new here, we only explore price action. Thanks for sticking around, all of my loyal subscribers. Let's dive right into the charts here. So today's March the 28th, 2022, and the current price of the DXY is $98.91. It's slightly positive, 0.1% for the day. Okay. All right, so before we get started, hopefully you guys are doing well. Let's do a really quick credentials check. What would any of my videos be without a credentials check, right? U.S. dollar currency index pending a big breakout. This is the video post that we made back in April the 7th, 2021. We were just kind of, we had the exclamations on here because we had a pretty clear understanding. If you see on the screen there, that's called a symmetrical triangle. We're actually going to show you that to you. $92 at the time of the post. So here we are once again with our symmetrical triangle. All right, so basically the U.S. dollar has reapproached this line of resistance, okay? So it looks like we're pending a pretty nice move to the upside because we got an X, hang on, sorry guys. X is continuing to get rejected, all right? Sorry about that. X, all right? So it looks like the American dollar is pending a breakout to the upside. I know one may be asking, okay, so dude, what does this mean for the stock market and, oil and so forth? What does it mean? I'm glad you asked. What we're going to do is actually comb through those details. What I've done is the only thing that I was able to do is go back in time and measure a move higher in the DXY. So this way we're going to do a comparison to what can potentially happen as a result of the U.S. dollar moving higher in comparison to gold, the 10-year yield, and so forth. Okay, so again, if you're looking at the screen here, we just simply compare what happened back in 1985 because the U.S. dollar actually went from approximately back in April 1980, it went from like $84. And I mean, it had a beautiful rally all the way up to like $164 over the course of about 5 years. So do you see the green check mark? That simply represents, the DXY moving higher. And again, the reason that we're taking a look at this is because what we're trying to do is we're trying to see what happens as a result of the DXY moving higher, because the symmetrical triangle, it looks pretty, it looks pretty straightforward to me. Let me know what you guys think down in the comment section, right? Resistance, we got support, another support level, right? Resistance, and right now it appears that the DXY is approaching a breakout. We're less than 3 days and 22 hours. We're looking at the 3-month candles for an official breakout, and this has never happened in the history of the American dollar, meaning that it has never broken beyond this resistance level within the symmetrical triangle, as we've already pointed out the X's on this symmetrical triangle. Okay. So let's do a little bit of digging through the charts here to see if we can find out what happens as a result of the DXY moving higher. We'll actually go ahead and start with gold. Please kindly ignore anything else that you see on the chart, just kind of my, normal chart stuff. All right, so the gold right now price is about $1,956.07, slightly negative 0.09% for the day. And what I've done is the same thing. You're just going to notice these little small boxes, and I've outlined 1980. All the way over to 1985 to get a general idea of what happened to that asset as a result of the DXY moving higher. So it's pretty obvious. You can see that the gold did not respond positive to a strong American dollar. So over the course of 5 years, looks like gold actually decreased in value, but of course over time it was well worth the investment. As we all know, gold has gone substantially higher as a result of it declining as a result of a strong American dollar. So that's what could potentially take place if we get get a strong Dixie to move higher here in the short term. By the way, the price target for the Dixie, according to the technical targets don't always come to fruition, so I have to be very specific about that. The red line, the technical target, is actually $154 on the American dollar. Okay, so let's take a look at the U.S. the 10-year yield to see how it responds as a result to a strong American dollar, or at least not as strong, right? At least a American dollar, the Dixie, that's breaking out to the upside. The current level for the U.S. 10-year yield is going to be 2.45, okay, slightly negative 1.1%, just 1% for today, okay? Let's go back in 1980 all the way to 1985. So as you can see, guys, I've outlined 1980 to 1985. It looks like there's initially a boost higher within the 5-year time frame. Looks like it happens within the first year. After that, it actually moves lower, and it actually finishes lower over the course of a 5-year period. And again, that's assuming that the American dollar has some strength here over the course of the next few years. And that's if we get an official breakout. We have to wait for the official breakout. Let's take a look at the the Dow Jones. The previous close is $34,861.25, slightly positive 0.4% for the close. Okay, and let's do the same thing. Let's take a look at the correlation between the Dixie and the price. All right, so it looks like we have a positive outlook for the Dow Jones if we get a strong American dollar here over the course of the 5 years. January 1980. We had a really nice rally that ended higher and continued to move higher over the course of 5 years if we get a strong American dollar or a move higher in the Dixie. All right. I'm very particular about saying a strong American dollar because without getting into all the details about the American dollar and the strength and everything. But yeah, this Dixie moving higher. All right. S&P 500, previous close, $4,543.05, slightly positive 0.5%. Okay. Looks like the S&P 500 also responds well to a Dixie that's moving higher. So as you can see, over the course of 5 years, really nice move to the upside and finishing strong. So last but not least, let's just take a quick peek at the crude oil. All right, let's take a look at that. The current price of crude oil is going to be $109.69, slightly negative 2.6% for the day. Okay. Remember, guys, crude oil, WTI, okay? So it looks like crude actually responds negative to a strengthening American dollar or Dixie going higher, okay? Over the course of 5 years, back in 1980 to 85, it moved lower and moved substantially lower as a result. So those are the things that I'm seeing as a result of a potential strengthening American dollar. So if we just kind of go across the board, guys, it's negative for gold. It looks like the initial U.S. 10-year yield, it moves higher within the first year, but of course finishes lower over the course of 5 years. And again, when I say 5 years, you have to just kind of correlate the behavior between the Dixie, however long it takes, right? We're doing the comparison between the time, but what I would simply do in this case is just simply compare it to how long it takes and how, not necessarily how fast, but as long as the Dixie is moving higher, I would expect the other indexes and assets to respond the same way in response to a Dixie that's moving higher, if that makes sense. So let's just say it takes, I don't know, 3 years, like it really starts to move to the upside. And it takes 3 years, then assume that everything that I'm saying about the other assets and indexes will respond the same over the course of that particular amount of time, 3 years, okay? All right, so hopefully you guys caught that. And of course, again, not positive for for gold. Initially, we get a boost higher in the U.S. 10-year yield, but eventually closes lower, depending on the duration of the Dixie and if it's actually moving up. The Dow Jones responds positive, moves higher as a result. All right. The S&P 500 the same, responds positive, and oil actually moves lower as a result of the U.S. dollar or the Dixie continuing to move higher. Hopefully you guys stuck around to the end. Thank you for doing that if you did. Hopefully you found this interesting as something that we don't normally cover, but I thought this was pretty interesting and I share with you. And that's the end of the video. So if you enjoyed that, leave me an appropriate thumb below the video. I would truly appreciate that. And also leave a comment so that the YouTube algorithm can promote the video. If you guys are new, we also explore the alternative markets. We go over Bitcoin, so you can kindly join us here on this interesting journey. And we'll send that out to you guys momentarily. I'd like to take this opportunity to thank you all for your time. Remember, always have a strategy before you enter. Keep that positive energy flowing. We'll talk soon, and bye for now, guys and gals.